comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
Shit, we're going.
And we're live, boys. We are live. Another episode of Final Settlement. Today is May 19th, 2025. How's everybody doing? We got Cam Duty on the podcast today. Early Riders Advisor, founder of Brickyard, legend. How you doing?
Best day of my life.
Cam might be my favorite VC, maybe favorite fiat VC. That's for sure. And then we got to figure out how big the transition is into Bitcoin. But super pumped to have Cam here on a bright Monday morning. You know, what was yesterday, like 106, 107, almost top ticked. I thought we were going to hit all time highs with Cam on the pod, but it looks like we got a little bit of a retrace.
Yeah, we got close last night. I think 106, a little over 106. But yeah, Cam. Also, I think you are probably the most recurring guest of the show. I think this is your third or fourth appearance on an Onramp pod. So yeah, great to have you on. No shortage of things happening in the world, in markets, in Bitcoin. The Knicks are in the Eastern Conference Finals. Are we in a simulation, boys? Things are strange right now. We got bond yields spiking. The U.S. has been downgraded again. Where do we want to start? Liam, I know you put together a list, as always. Should we start with the downgrade?
Yeah, let's start there. I mean, bond yields are something that are really interesting at the moment. It's kind of going to drive all of what Trump does with his entire strategy, because it's a lot of Trump's global financial strategy is coming from Besant at the moment, in our view. And, you know, bond yields are higher than when they were pretty much. The 30-year is above 5% at the moment. It's pretty inevitable that the U.S. Got downgraded, but it kind of also ties into their existing, new market bill from the Republicans as well, in which they are planning to do like 1.5 trillion in budget cuts while, growing the budget by 4 trillion. So there's going to be increasingly more deficits moving forward. There isn't really a sustainable way to pay for everything that they have going on. It seems like a lot more of what we're seeing before, and that's not great in a world in which we increasingly see multipolar world, other companies or other countries looking to acquire additional Bitcoin. What do we think about, the move from inside money to outside money, hard assets versus government credit?
I think Besant did an interview last week that was fairly telling, and you sort of alluded to it, where he was painting a pretty grim picture of like, hopefully we can kind of grow out of this, but that was a very a very hopeful stance of, perhaps we can grow out of this, but we're going to have to keep spending. We're going to have to keep printing and debasing the currency effectively. And this rating's downgraded. So I think this is Moody's. I think a few years ago, correct me, Liam, if you know the exact date, but I think S&P and Fitch had a similar downgrade a few years ago. And so this is not necessarily new. Yeah, not necessarily new, but just sort of a follow-on downgrade.
This feels like a nothing burger / like Fed speak. Like I think like go back from just a pure, left barbell. Like what's the movie? The Big Short. And when they went to the credit ratings, like when was the last time they were actually objective and non-politicized, right? This is like close to 20 years ago. And nothing's really fundamentally changed post-election, but now they decide to. So there's like some political, potential reasons coupled with Fed speak. You're mentioning Besant, and then this reminds me of there just has to instill confidence in the market in the same way that they talked for the past 2 years. We've been doing TLT, and they keep saying inflation's 2 to 3%, and we know it's like 7 to 12 to 15%. So yeah, it's just all like noise.
Cam, any thoughts? Any thoughts on the global macro?
I mean, I
You
feel
don't
like
have to have thoughts because you don't have to have thoughts because just again, but you can.
I mean, I don't. This isn't totally my wheelhouse, but I feel like the 10-year is like the referee that nobody listens to until they absolutely have to, and so it's sort of like the tail wagging the doll, like or dog. It's like when you look at this chart, it forces things to happen. Like, okay, I guess we need to downgrade because something is clearly off. And I don't know how much of it is like actually geared around trying to drive any kind of like specific outcome. I think it's just like okay, we have to cover our own ass. We have to do something about this.
Yeah, and maybe to articulate, I think what you're saying and where I think it's nothing burger is there's like 10 different ways from Sunday that bond yield can spike. And then effectively the government has to step in to provide liquidity to get it below that price before things start blowing up. So it's just like, it always just comes up every 3 months. There's something happening because everything's, fundamentally fractured and just interdependent. So whether it's like the Japanese markets or some other part of the world where something's happening, it causes a liquidity crunch, bond yield spike, and then naturally some random like either transparent or non-transparent form of liquidity steps in to produce more monetary units, which has the purchasing power reduced. So it all just like comes back to that. But then once you get into the mechanics, like if you're productive humans like everyone here, it's like how far can you go in the weeds to understand what the reason is this time. And
zooming out, like yields aside, like Cam, this is a tweet from you. So here are your thoughts. Somewhat related is like this is sort of the inevitable long-term trajectory here. There's likely to be technological deflation into the future, and the U.S. government just can't have that with 36 trillion in debt. And so, printable money will be printed. Unprintable money, you sort of subtweet Bitcoin here. You don't actually say the word Bitcoin, but unprintable money will be fled into.
Yeah, it's weird being a venture investor and a Bitcoiner. Especially one that talks about Bitcoin so much. It's like, I want the people, my kind of group of peers in the venture space is largely just uninterested in Bitcoin because, I've said before on pods with you guys, you can't justify fees or carry on Bitcoin. And so it's just sort of, if you're a professional in the venture space, your job is to go and find companies and go raise capital. And like, it's just like sort of outside of your system. And so there's sort of a like a hard obstacle that I think a lot of these people would be extremely interested in this if it was relevant, but it's just not to their livelihood or so they think. And so I want them, I'm kind of like speaking to them a lot of times when I'm talking on Twitter, where I won't actually mention Bitcoin. I want them to kind of start to understand the core mechanics of what's happening, and they can, they're smart enough to put two and two together on this stuff. But I do that a lot with my friends too. It's probably with you guys. Bitcoin comes up so much in every conversation. It's like I kind of want to just stop using the word. But yeah, I mean, for this tweet. Like my beat, as you guys know, is what I'm so worried about is I think a lot of economists think that this productivity miracle is going to be good. And I don't understand why they think that. And I may have told you this story, but I was in a meeting with the head of the Fed, one of the head economists of the Fed. And I told her, she spent 45 minutes talking about the current state of everything, and then she made a comment about, but we're really hoping that the productivity miracle of AI is going to be, very helpful for growth in the United States. And I'm like, you understand, when that productivity miracle happens, that's just deflation, and that's just making the real value of your debt that you carry completely unpayable. And I'm having a hard time even like grappling with it, because it was like I told her something that she'd never considered before, and it's like, what? You were you're the head economist at the Federal Reserve, so yeah, I'm like, I just continually, I look at AI companies all day, every day. I'm seeing our engineers writing 95, 98% of their code, is not written by a human being. YC just surveyed their last cohort. What percentage of the code written in your companies was written by AI? 95%. All right, one cohort prior to that, it was like 5%, maybe, right? And this is a quarter apart. And so this stuff's happening so quickly. Teams are going to be able to do so much more with so much less. And I think we're right in the beginning, the first innings of the economy actually feeling the effects of deflation, real deflation, real like scary deflation, for the first time, ever.
Yeah. Well, there's a lot there. I think part of where I started off a little hot with I don't care about Moody's is because we had Matt Pines on the pod Friday or Wednesday, and they came out Friday. And I've been thinking of this. I think a lot of us have. There's a lot of intersections on the convergence of Bitcoin, AI, and then energy. But as you start like going more, they're just starting to like, and they come at different facets from like the socioeconomic perspective of like Bitcoin is just so wild to think about, but like AI will help you understand it better because you'll start to see the world through like just a completely different lens, i.e. the deflation. But then also the energy component and just the battery nature and being able to leverage different sources, but then and then also just money. And so like those things have been out there, but now you start to see more of this when you see the geopolitical, things taking form in the Middle East. But taking a step back, what you said about the venture capitalist friends, you can squint and see how in 24 months, roughly, give or take, the bid for AI companies from a geopolitical and like whoever wins, winner take all, potentially for ASI and AGI and all these things are going to be at the same level of fervor on the Bitcoin side, right? Because there's the geopolitical like ramifications. And because there's only 21 million of these things and there's only so much infrastructure and you want, whether it's custody or you want to be mining. But it's the funny notion of like obvious is obviously wrong, right? So like VCs are always looking at the obvious thing. It's like, no, like you're just missing, like you're one tick away and then you can get the whole picture to your point. And so it's just it's a super fascinating thing because to your point, like if this was 2 years ago or 4 years ago, we'd be too early. But what you said is happening. It's just it's so fast that these like agents and like Xiaomi Mint and all these things, while they're still like, you can't really put it together. There's going to be very savvy people that grok Bitcoin from the traditional markets, like traditional Googles, traditional Metas, traditional OpenAIs. And they're going to see the missing pieces that like the hardcore Bitcoiners that were here early missed. And they're just going to like tile this stuff together and they're just going to print money with these small teams. And I've just been thinking about it. That was kind of part of what I said yesterday is my mind can't like, because it ties into the energy, the internet, and the way that it's routed, but then also just the societal forms. And I think that's how the Fed person backed into the right conclusion. The deflationary is right because we have a battery that's going to be able to absorb it, and then you'll be able to rebuild back up because you can't print those monetary units. If we were just going to have a CBDC and printable money, then we're kind of screwed because you end up in an Orwellian place. So anyway. Everyone, thanks again for tuning into another episode of Final Settlement. This week we had Cam Duty on, general partner and co-founder of Brickyard. Cam is an awesome friend, Bitcoiner, and also just evangelist in the VC community around bringing and infusing Bitcoin into that capital market and figuring out how to just help that community see Bitcoin. It was a really exciting conversation. Cam's been a big believer in multi-institution custody. He's a client advisor to early riders, and I think there's a lot of things he shares in the podcast that you guys will appreciate. Quick word from Onramp. As you guys may know, we actually launched Onramp Trade about 3 weeks ago. That's exciting because folks can sign up before end of June and get access to no fee trades until October. So if you're interested in testing out our suite of services or have friends and family that want to get onboarded, please feel free to let them know to check out onrampbitcoin.com. Only other thing worth referencing is over the weekend, there was a Wall Street Journal article that came out. I'll actually share if you're watching on YouTube. It was titled Severed Fingers and Wrench Attacks Rattle the Crypto Elite. I had recently done a podcast with Stefan Livera last week talking about multi-institution custody, our journey here, but then really referencing that as Bitcoin holders, we're not prepared for what the price is going to do, but also the ramifications as we think about holding a digital bearer asset next to our friends, family, loved ones. I encourage you to take a peek at the article. If it's behind a paywall, just reach out and I can happily send you the article. But it's just a real key moment to just rethink security in a digital world and what does it look like as the price appreciates, and bad actors also are aware of that. Appreciate you listening in for another week of Final Settlement, and hope to hear from you soon.
Yeah.
Another tweet from Cam I wanted to pull up that is related to what we just spoke about is this one. Maybe you could unpack this a little bit more for us. But this is effectively, a thesis that we hold at Early Rider, doing more with less. Like, this is how you're going to have to adapt to this new world. And this was in the context of SaaS founders. But maybe if you want to add some more color to this.
Yeah. So I think the difficult part about investing in AI today is almost all of it is going to be super beneficial, accretive, valuable to the consumer. You take like a very simple use case, like voice AI for like dentist offices. Okay. This is going to be better for the dental operator, and it's going to be, or the dentist that owns the practice, and it's going to be better for the customer. And that customer is going to be able to get all the information they need way quicker, more simply. They're never going to be on hold, et cetera. The dentist office is not going to have to manage a human to sit at a front desk to basically query, handle the same questions over and over again. There's a cost benefit there. So for the end user, there's tons of value. For the venture capitalists, it's uninvestable because the technology, AI is, as this becomes commoditized, all that means is there's just going to be more players that are spinning up voice AI agents to and going and selling to dentist offices. And they're all going to claim they have a better product, but they're all going to be like within like a 1 or 2% band of like, how good is this product? And so the only benefit or the only differentiation on go to market for these teams is going to be price. And so, it's just going to be a race to the bottom on price over and over and over again. And so that's uninvestable for us because, venture capital has to build, back companies that have the potential for 100, 200, 500x outcomes. And so you have to look for signals on like, okay, the core technology is going to be commoditized and everybody's going to have the ability to do these things. The signal that you're looking for as an investor is like, how do you create that kind of stickiness that allows you to just get out of the race to the bottom on price? And usually that has to do with like some kind of like strange insight on who the customer is. It can do with a lot of times with like higher regulatory categories where there's some kind of like very difficult obstacle that you have to overcome that's going to scare away competition. there's a number of ways that you can kind of find an answer to this question, but the key is how do you get out of the rat race to the bottom on price? And if you don't have a good answer for that, like there's no way to even take a second meeting with a team.
Yeah. Right.
That's a great point. A lot of the products are not differentiated at all. And so I think what you're saying is the real differentiation is the distribution in order to get in front of the most amount of customers. That kind of goes away over time, as well as the access to, there's something in there with getting all of their data and kind of selling it on the secondary market that, it gets pretty insidious pretty quickly. And then the last aspect too is just like the ability to, there is something there with managing the capital and being able to sweep that into Bitcoin if you are profitable early on and entering other markets later and being first. But in the long term, you need a product that's completely differentiated from what the market is offering, and that's just not there in AI today.
Yeah, you either need a product that's differentiated or you need a customer that is overlooked. And or you need some kind of hard hurdle that is going to, and usually that has to do with the customer. It's like, what we hear a ton talking to whenever I ask this question with founders, about 80% of the time, it comes down to, well, we're just going to grow faster than everybody else, right? We're going to raise more money and we're just going to grow faster and it's going to be a land grab. And then, we're going to win. And I'm like, no, you can't think of it like that because, you can go and get all of these customers and onboard them onto your product. And you're like the team that goes through the brick wall. Well, because somebody else with like 3 people that can understand, what you've built, because they can come and rebuild what you've built to like close to parity. They're just going to go to all your customers and they're going to say, hey, you're spending, $50K a year on this, come to us for $30K and you'll be happy. And then somebody's going to come behind them, do it for 25 and then 20 and then 15. And then it basically just falls to the cost of compute over time. And so there has to be something more than just product differentiation. And there has to be something more than just speed to market. There has to be some kind of like, structural stickiness that's allowing you, to provide value to customers in a way that they aren't going to be willing to rip out whatever your product is for somebody else that offers it for less. And
I think that's where the capital stack, where Liam's kind of referring to, is it's part of like how we set this up is coming to the conclusion that the person that's going to always be undercutting or do it with less people or less overhead and capex is going to be the Bitcoiner because they want more Bitcoin. So they want to dilute themselves and raise the least amount of money and then have the least amount of capital outlay.
Yep.
And then to your point, this is where it's always been interesting on the Brickyard and just like notion of investing is you can do 2 things. You can either hold the money in something that's going to outpace the market, or the founder can just spin his wheels and try to outpace the market on this other side. And the kicker is that it's a real moat. It's not forever, but it'll be for the next, call it 2 to 10 years, because when you're having inflation, because inflation touches everything, you have to raise your prices. And so your margins are compressing. You can actually lower prices, increase client services. So that will it's being its own inherent moat in a lot of this stuff. But real quick, one thing to call out, I didn't know if I was going to bring it up, but I thought about it this morning. I'm curious to get your guys' thoughts, because there's something here is, I think what we're talking about is like it's eerie cousin of real estate, in the sense that we know real estate has these monetary premiums that are overinflated because of the amount of monetary units. And then there's the notion that when people wake up, the natural price will start to delever, and then only so many people can fit through the door. And then, whoever has the Bitcoin will be able to go buy the real estate, something like that. Well, think about that in the SaaS world, where what if, I think there's like a structured product, but independent of being a structured product, you just go take, and because I kind of know this guy is Owen from Intercom, right? You're at Intercom, you have this X valuation, you go look at the market and you say, can I sell it at a 20% discount? Whenever can I ape in to BTC, and then depending on your clauses, you go rebuild, or you start a fund, or maybe the fund does something where you go invest in something. A couple, founders, you pull from the team that you can go rebuild it with maybe two other trinkets so you don't get sued, because you're integrating now these other aspects of it. Like, this is effectively what's going to happen. And you can just like spin out all this crap because all these PE people and fiat people and all the people that are in your circles that we talk to, if you told them, hey, you can go buy this at a 30% discount, and then you just put that all in BTC, you don't have to work, and you can let the market do what it's going to do. Like, this will eventually happen. A little bit more friction than real estate, but still, it's still the same principle.
Yeah, and on that same vein, it's the same thing with, if you have two SaaS startup founders, one sees the writing on the wall that its value is going to decline in Bitcoin terms over the next 10 years or so. The other one does not, and they're at a fundamental disagreement. One is likely just going to say, you know what, that's fine. I'm just going to, you can take my shares in the company. I'll take that money, buy Bitcoin, and then potentially start the company and end up going and trying to run circles around you, because I know, kind of how the company is working, as well as, the gaps that we can rebuild this moving forward. And so they can just use a harder form of money and outperform their, former, team.
Yeah.
I will say there's something that, like, this is going to be polarizing, but I'm fairly confident it's right, is there's a plane of consciousness that we're talking about, like, will not go down. You'll only go up. So, like, if you think about, and I've been telling Brian about this a little bit, when you think about, like, Snapchat as an example, when you used it, if you handed it to a boomer or somebody over the age of 45, it's just like, it's not coherent to them, because they're not used to, like, the framing. And this will get a lot of shit, but when I hear thought leaders that are over a certain age, I won't use the age, so I can't get too much shit for it, and talk about Bitcoin, they're just like, see like a small component, but they can't see the 360. And when I think about this, it's like, you can talk about deflationary tools and AI, but the speed of its movement takes a certain mindset and understanding of adaptability and growth. And this because you see this all day long, Cam, where others just drown. They drown at our company, they drown just in the world. And I see this with companies in the way, like the ratings agency is a good example, or when you go on CNN or whatever the, du jour, like CNBC talking heads, it's like they can't actually grok what's happening here. And they look at this like old world. And so it's only going to accelerate. And then that plane of consciousness is only going upwards. And you can't move from a certain level all the way up it. You just have to like be growing. I don't know. It's a hard thing to explain, but this won't be available for everyone.
Go into that. What do you mean it won't be available for everybody?
So, like, basically think about how you got into Bitcoin, whatever the year was, and the amount of compounding information, because you effectively, like, we all know where we were pre-Bitcoin, and the amount of information, we were probably all curious individuals, but the level of curiosity and rabbit hole chasing and truth seeking fundamentally changed with that. And you look at it and it's not linear, or whatever the term, like it goes like parabolic, because it continues to compound, and then you layer in AI and the adaptability and use of that. And you're always trying to get to like the most efficient. You're being constrained. It's how all these conversations, why this podcast is starting to get more and more success. Like, you could taste, it's a taste thing. And when you hand somebody a tool now, and the reason where I'm bringing this up is, like, when you think about it, the IBMs are great to pick on, but just any publicly traded company and any company in general, go back 5 years and think about how much fat is built into that organization, let alone 10 to 15, because they're just using like archaic systems. They're probably I remember when I was at WeWork and we were doing a deal with McKinsey, and we went into McKinsey's office and we showed them Google Slides. This is 2018. And we show them slides, and that you can in real time edit and not have to download and send it. This is 2018, and they're losing their minds. These people are the ones educating the rest of the world on consulting, business consulting. So that's like a frame of like, all these companies have no idea what's happening. And so now you're going to give the people that little like battery, which is Bitcoin, to seek out the truth and then leverage all these tools. It's just a different world we're all heading to, and not everyone's going to make it, basically. It's not they won't make it. They'll still exist.
Eventually, by necessity, they won't be early to it. They won't, Yeah, it's interesting to think about. Like in my journey, I started buying ETH first, like back in 2015, and just because a buddy was like, "Hey, you should buy some of this," and I was like, "All right," and then that kind of got me on the thought of like what decentralization could be. You know, ETH at the time was proof of work. Started to understand some things, but I was busy building my company, and I didn't really have the time to um, to spin with it. And then it wasn't until we sold our company, and I, you know, was waking up at like 9 a.m. on like a Tuesday and being like, I don't know what my life is. Like I've been so used to going so fast for so long, and I'm like, guess I'm going to yoga class on, you know, this morning. Um, I had all this time, and it was around, you know, the time where I went heavier into Bitcoin, right when COVID happened. And it went from like, you know, that year went from like 10% to like 50 or 60% of, you know, my net worth. And like, I didn't have anything to do. So I was like flying around the country talking to Bitcoiners. Like I was just like getting meetings, going places, talking to people, listening to every podcast, reading every book. Like I was on this like neurotic quest to like defeat this thing. And no, yeah, people are not going to have the opportunity to do that. Right. And I think the materials today are way better. You know, it's way easier to get spun up on, you know, technicals of Bitcoin, but
It is, but at the same time, I think like this is indicative of sort of the plight of the average person in the sense that yes, the information's available, it's more easily accessible than ever, but you also have sort of propagandized narratives around, you know, the average person still thinks Bitcoin's Ponzi. Like they literally still think it's a scam, and they've been told it's died 430 times.
yeah,
You know, if they had just not listened to that advice and bought Bitcoin instead, it would have worked out pretty well for them.
yeah,
But this is just the reality, and I think it's, you know, it's sometimes hard for us to grasp because we're so inside it. But you know, I was at a wedding this past weekend, and you know, occasionally someone will ask you what you do, and you bring up Bitcoin, and the look in their eye is still like, what the hell? Like you work in Bitcoin? Like I thought that was a Ponzi. I thought that was a scam. Their mind goes to SPF. Their mind goes to all the blowups that are unrelated but adjacent to Bitcoin. And so there's still just a massive, massive education gap. And you know, I would think though that the tendency for someone to actually dig in and start to understand, like there's probably a greater propensity for, you know, someone who is an entrepreneur, who is a founder, who's probably naturally more curious. So I would say like, you know, hopefully, you know, optimistically, people that are actually building businesses probably have a greater propensity than just the average person to start to understand this. I'm curious, Cam, like, you know, as you're talking to founders and people, like, would you agree with that? Like, is there naturally more curiosity to understand something like this, or is it still, you know, they're just so caught up in their own, you know, business, whatever it is?
yeah.
That,
I mean, I think
yeah,
that the entrepreneur is like a perfect person to grok Bitcoin. The problem is if you're building a company, you don't have any time to figure out something else, especially, you know, something that just you have to like grind on, you know, something you have to battle through to answer all your questions, and it just takes time, you know. And so I think it's difficult for founders because they don't have the time. It's difficult for venture investors because they're not, you know, financially incentivized by it. It's difficult for, you know, your guy that's, you know, running a route for Frito-Lays, and you know, and he's trying to put, you know, food on the table for his family because he's just you know, spending all of his time actually, you know, trying to make a living. It's hard all around. You know, I think I've had a number of conversations with folks that are really smart, they're very successful people that have bought Bitcoin in the past. And I had a conversation 2 nights ago with a guy, very successful entrepreneur, has sold a couple companies. And he's like, man, I feel like I just always miss Bitcoin. Like I bought it like really early, and then it like went up like crazy, and I sold some of it, and then it like tanked, and I got rid of all the rest of it, and like, it came back a few years later, and like I kind of did it again, and but then kind of the same thing happened, and like I just never really, and I'm like, yeah, you have to understand the asset before you can hold it. It's like it doesn't matter when you bought Bitcoin. It's when did you when did you go through the rabbit hole? Like when did you answer that final question when you realized that this thing's going to be very difficult to impossible to kill? And like this is, I guess, a long way of saying I want to think that we are going to see a massive adoption over the next year, 2 years, because I think Bitcoin is going to grow at the pace that AI grows, and nothing stops that train. Like, but it does just still, it feels like we're so far away from even converting like really smart people to understanding what it is.
I think the two anchor points are the benefit for us is they won't have to, like, and this kind of ties into not leaving left behind. Left behind sounds like morbid or like they won't make it. It's like it's similar to having built in the space. You get to see like data profiles of the US in particular and the amount of Bitcoin sitting, and like I would say over 50% of all the Bitcoin sit in California. And that kind of supports this notion of you're kind of grafting on, you get the internet, you get topography, and then you kind of, you're ready for the next thing because you understood that. But most people don't know how the internet works, right? Well, they just use the internet, and they weren't going to get on unless, you handed them a browser and you handed them wireless internet, and then they just use it and they don't care. And their lives got incrementally better, but not to the notion of building a Google better. Those are fundamentally different things. And so I think that's what we're talking about here is you actually don't really have to understand Bitcoin at a certain point. You're just going to use it because everyone's doing it, and you just buy it in your ETF, and then you eventually learn that they like those units. It'll like get obfuscated, and it'll be like, oh, I own this, but it owns more dollars, and it keeps going up. So I just keep putting more there, and you won't have any idea about monetary theory or anything. It'll just make sense, and then your life will be better, and you'll incrementally get better because your money can't be debased, and you're not on the rat race. Yeah. Versus what we're talking about here on like seeking truth and how the integration of all these things go together. But the other aspect that you hit that I don't think we talk about enough, and I feel really naive, and I talked about this on that SLP pod, is it's just this notion of beginner's mindset when you think about building in this space, because it's just kind of wild or insane to think about putting all of our money. Like on one side, I feel kind of crazy that anybody doesn't have all their money in Bitcoin because we all understand the properties. But then on the other side, I can see how people would think it's insane to put any material amount of money in this asset versus everything they've ever known, which is like a 60-40, maybe some real estate, because they're all tangible things. And so to your point, nobody has the time. And that's why COVID, again, for 5 years, having thousands of discussions at this point with like clients, and the 2020 point was by far over 50 to 75% of the time they got it. But they always reference it was the amount of monetary units printed. And it really wasn't that. It was the fact that everybody got locked in a box and they just had a shit ton of time to just look at the problem. Yeah. And that's what allowed their mind to open. And nobody has that. Even if they're a billionaire, they're just busy by life.
Right. Yeah, I agree. I mean, I think that's, you know what the most impactful thing that I can ever tell somebody to get them to actually take Bitcoin seriously is I tell them that I don't own USD. And almost every single time it sort of like shocks them awake, and they're like, wait, what? Like, you don't hold USD? Like, you're like, yeah, I all of my liquid net worth is in Bitcoin. And they're like, okay, what was that book that you told me that I needed to read?
I like that. No, that's a great framing, because what I was going to say when you were speaking earlier is like the precondition or the bias is that like this thing is a trade. And until the person opens their mind to like, no, it's just better money, then like they're not going to understand. They're going to think they missed it. They're going to sell at the bottom, all of these things, because they're viewing it as a trade to get more dollars. Yep. And so that's perfect framing of like, no, I don't want more dollars is the actual framing, because this is just better money. And Michael, to what you were saying is like, as the banks, other financial institutions get more integrated into the system, like we've talked about this a bunch of like, once you have your dollars right next to your Bitcoin in the same account, whatever it is, that's going to be a huge learning moment for folks as they just see like, oh, like this this other form of money is just going up in dollar terms. Maybe I should just put all of my savings in that one and only spend the dollars as I need to. And so that sort of just juxtaposition and like, again, just like better UI, ease of use, not having to figure out hardware devices, all of these things, as it just gets easier and easier. To your point, Michael, like you don't have to, go fully down the rabbit hole to understand that Bitcoin is going to buy you more eggs than the dollars into the future.
I mean, I want to talk about something. I'd love to hear your thoughts on this. Like my view on, and I may be like throwing you off on what you want to talk about, but I feel like what's happening with the tariffs right now is the White House actually understands that we've offshored all of the production of real things to the rest of the world. We've become a service economy, accounting, financial services, legal, consulting, like those are the businesses that mainstream America works in. And I think that they are realizing that AI is about to demonetize all services. And it's like, okay, yeah, it's probably also going to demonetize the production of goods and manufacturing eventually as well. Maybe to a lesser degree, but at least that's not here yet. And we may have some juice left to squeeze in the thing. But like if we don't get some industry back, we don't have an industry of the future in the U.S. today, because all of these companies that are built on commanding a price of services provided, this is about to fall to the floor faster than you can possibly imagine. It is such a weird place for me to be thinking like, okay, I heard Balaji or somebody say a year ago, AI is going to kill SaaS. And I was like, come on, that's ridiculous. And it's now like, oh yeah, okay. It's agentic AI is like totally going to kill SaaS. Like unless you have some super sticky mechanic to your business, you're going to have a million competitors coming and throwing a similar product at your customers for less money, or your customers are just going to be able to speak into a box and say, hey, I want this. And then they're going to have a 5-hour conversation with a machine, and the machine's going to kick out exactly what they need, And so all of that is, it's just such a weird place to be thinking about technology, what technology is about to do. And then Bitcoin is like clearly as this battery that's going to absorb all of this excess buying power that's created by more efficiencies in the market. And yeah, like I'm now starting to think more like, the conversation about how is this transition actually going to look? Like, is this going to be super rapid and is it going to be carnage, or is it going to hopefully take a little bit longer? But like, I'm kind of like, my mind is now like Bitcoin's going to grow at the pace that AI grows, and AI is just absolutely going to rip. And I don't know what slows that down other than energy.
Yeah, I think what you hit on something that we haven't really talked about a lot, but I don't think there's any singular reason, but the three like things that it feels like are converging are, to your point, deflationary, like technology as it relates to services in the US. But then there's the natural like defense perspective of like, you have to reshore and build things here because you can't rely on your, counterparties to deliver. And then the last one is just the natural debt, the market structure around the debt that you have to inflate it away. And if you're doing all of those things, it's naturally inflationary. So you need your individuals, the citizens, to be able to hold assets to outpace inflation. And this is something we've been talking about. This is where the ETFs come in and the normalization of Bitcoin. I think this has been like kind of set up for years of like, because you can't really, not everyone can buy a house, not everyone can buy hard assets, but you can buy a sliver of BTC and outpace that. But the thing that you hit on is that like, there's a pretty good framing on a lot of this. I think we probably have our hands around where you can at least like go through the night like with a walking stick and trying to get home. The thing that I think we all don't get, and I don't know if anybody does, is what does the UBI like whole aspect of just like completely wiping out somebody's wealth, because that's what's going to happen here is like people are just going to get this repricing is going to happen from a micro example all the way to like funds that have invested hundreds of billions of dollars into all these different things that are just going to compress to zero, and a lot of people are going to get left holding the bags, and then when it comes to pensions endowments, they're not going to be able to fulfill their obligations. So that's the thing that it gets a little dicey, and how does it actually play out in that world?
Yeah. One of the other things too that I think a lot of people have been skeptical to reinvest in the US manufacturing just because of a couple factors. One, the volatility around potential tariffs and what they ended up looking like. And, do these end up being, forever, or are they going to change what the actual tariffs are next week and make it, non-economical to invest in the US? But like from another perspective as well, one, we don't necessarily have the skilled labor in some of these industries, but two, it doesn't really make a ton of sense to invest if we're talking through all these different deflationary technologies, whether it's holding Bitcoin and seeing the cost of manufacturing and deploying all this capex decline significantly over time in Bitcoin terms, or it's actually just seeing that potentially the world may not get as fractured as we actually think, and the potential of still getting all of your widgets from overseas doesn't actually that still ends up being okay. It's a really uncertain time, and that's why I see not quite as much of the announcements of U.S. infrastructure that we were all expecting. Maybe it's a little bit different around some of the data center stuff and chip manufacturing. But other than that, there hasn't really been anything that's kind of come back in terms of announcements.
Yeah, I think there's almost two sides to it. It's like, well, do we really go full steam in terms of like reshoring manufacturing, or do we just try to secure all the energy infrastructure that we need to hopefully win on AI, basically? And I think that's what you saw last week with Trump in the Middle East making a lot of deals. I think the imperative there is that we're probably, if we're being realistic about it, like behind China in terms of AI development. And so we need to sort of, make the right partnerships, make the right deals, even have a chance to ultimately compete there. But yeah, it's, I think it's, underappreciated that Scott Bessent is a literal former gold bug from his Wall Street days and talking about Bitcoin in the same breath as gold. So I think there is this tacit understanding from at least him and others around him that we do need to not only reshore manufacturing, but just like have a greater emphasis on hard assets again. Because Michael, to your point, like they're going to continue to debase the dollar. Like that is inevitable. They're going to have to print and debase the currency. So you need to give your citizens an out effectively. And, for most people, like they're not going to be, hoarding bars of gold. So the very easy answer is like you just, you own Bitcoin, whether through an ETF or other type of product that's just easily accessible in your brokerage account. Ultimately, it'll be, far easier to own the underlying as well. You might not even need to use an ETF. But I think that is certainly the trajectory here, where it's there's an understanding that we're going to have to continue to print. We need to allow our citizens the out to save in a harder money. And, the dollar is probably going to be, okay in terms of dominance going forward, because we're going to lean into stable coins. Hopefully we're going to get this stable coin bill passed. And that's actually been interesting. I don't know if we want to go there. And just in terms of the sort of the regulatory conversation, there's been some, I guess you could call it headwinds to both the Genius Act, which is the stable coin bill, and then the market structure bill. But I think that is certainly part of the plan. Is like, how do you plug the hole for demand for U.S. government's debt? Is you have these stablecoin issuers that are going to buy it and then proliferate the dollar into all markets around the world. Whether you have a bank account or not, you're going to be able to access the dollar through these stablecoins. So it does seem like they have some sort of plan around we're going to hang on to dominance by spreading stable coins. We're going to allow the average citizen to save in a harder money. And ultimately, like we were saying before, like these things are just going to converge, and like ultimately it's going to be very, far easier than it is today for someone to understand that landscape of you can't save in dollars, and it's, the monetary premiums associated with all these other asset classes are likely to erode. And so you just need a better form of money. But yeah, it'll be interesting, boys. Where do we want to go from
Did you
here?
have something? Well,
No.
Cam didn't have any. Okay, so I was thinking about, you were mentioning, Liam, investments, and naturally you have to build things. You need capital allocation. I think something that I'm particularly excited about taking a step back, like from a meta angle, is now that you don't have the centralization of money, as the monetary units naturally expand, you're going to have just these different pockets that are going to be thriving, right? And you're going to see this in all different segments, whether it's an individual, corporate, treasury, states, right? You see like Texas, Tennessee, these other states, and like Texas is an example just because I'm familiar with it. You have, not only energy, but there's the technological component. There's Austin, there's Dallas, it's bringing Wall Street, but then you have like the meat, you have food. Like you start to like build these different like singular, I don't want to say fiefdoms, but you're building like resilience and redundancy. And then another angle of this is like in Saudi Arabia, that the deal that happened last week, where there's this notion of, if you're going to build AGI, you naturally need a lot of power, you need a lot of compute, a lot of energy, but also if you're going to deal with policymakers and regulation, well, it's like, why don't you put it somewhere else where there's nobody can touch it? And so there's a lot happening over there. But you start to see this view of, you're going to start to host models locally. You're going to, you think about like lightning and routing, like all these things are going to naturally just start to, what was very centralized is going to now start to become very decentralized, because the money is decentralized. And then those pockets are going to organically start to produce value because you have to return that capital. And so one of the interesting angles that it's still early, but it's kind of the notion of why I don't like the public traded companies set up, because it reminds me of like if you're a crypto trader and you're trying to make more Bitcoin and you're trading crypto, like you don't have a fighting chance. Or I'm sorry, if you're a crypto trader trying to make dollars or like anything, you don't really have a fighting chance to do it, because you just have the wrong monetary units. So you're always going to be thinking about it the wrong way. Where at least if you're a crypto trader or a Bitcoin trader and you're trying to make more Bitcoin, you have a fighting chance. In the same way that if you are a Bitcoin treasury company or a company or a fund that deeply understands what we're talking about here and is playing the game to get more Bitcoin, to go and exercise that strategy and use the underlying, you have a fighting chance to allocate in the right way. But if you're just a guy that like found an edge in around arbitrage on the capital markets, you're probably going to lose that Bitcoin at a certain component because you don't even understand the underlying. And so I see that as going to be a very interesting edge when we think about, well, if you're a fund or you're a PE firm or you're a company, sure, maybe you play the fiat markets and you go raise a bunch of capital, you go hold that BTC, and while everything we're talking about is happening, the deleveraging is happening, you're going to be picking up all these different assets and just building businesses. Like that's going to get super exciting. We're still early, but that will come.
Yeah. Also, just a note on the Bitcoin treasury stuff. Like, I think there was a thinking when Saylor first started doing this strategy that it would be widely adopted by every corporate, every public company. And we haven't really seen that. And even now, as we sit here today, it feels like every week there's a new Bitcoin treasury company, but it doesn't feel necessarily organic. And what I mean by that is like, it's not the companies that you would think it is. It's almost these like contrived, forced, like just copying the strategy, spinning up a SPAC, and we're just going to buy Bitcoin, hold the Bitcoin. And it's not as organic as like, some successful company saying like, oh no, we see the light of Bitcoin as the best form of money and we're going to, do this strategy.
The problem, and Saylor said this a ton, I've seen it personally. The problem is you have to make these decisions at the board level. And it's, how many boards out there are, how many boards do you have a majority of Bitcoiners on that really understand it, and not only that, but it's like, is it the right people on the board that understand it? because even if you have, enough board members that are interested in doing it, it's like if you have the one big or the one board member that's most relevant to the treasury or whatever, they don't get it. Their job is to make the right decisions, and you force these like really contentious discussions with these boards, and so we're just not there yet around on the consensus with the mainstream, and I think that's why it's so difficult to get companies to actually make the decision to move forward with this. Like even if they know it's the right thing to do, it's so difficult for them to actually pull it off still.
And it all goes back to the education front that we were talking about earlier. These board members and CFOs of Microsoft and et cetera, they just don't have the time. Like they're running their own billion-dollar companies or trillion-dollar companies and just like don't have the ability to sit down with it. I was actually talking to my friend over the weekend about, what has the government done to our money? He's like a hardcore Austrian economics guy, read a bunch of Mises and Rothbard, back when he was in high school and college, and was talking to him about Bitcoin, and I'm like, hey, you read all the prequels to the Bitcoin Standard, like you should go and read this thing. He's like, yeah, maybe I will after I get home from being a lawyer. And it's like, all right, like he doesn't really have time for it. Like nobody really does until they just like understand that this is something important. And these people have who just don't hold USD do end up outperforming to a very significant degree, and this is something that they should end up finding some time to really learn about. And that's why we put so much focus on the education here, with everything from research to these podcasts, just trying to inform all the potential readers and listeners.
I have like an idea of, I think actually the way Bitcoin has grown in the past with these cycles is everyone has that conversation with the Bitcoiner, with somebody that like really piques your interest, where it's like, okay, I know this is a smart person. They are clearly, convicted, like they've got all their money in it or whatever. And you don't ever pull the trigger, or you pull it late in the cycle when the price is running and you're like, God, I could have, put it in at, a tenth of, where I put it in at. And then the cycle ends, and then it tanks, and then they sell, and then it evens out higher. It's like this. People don't forgive themselves for opportunities that were so clear that they understood, that they passed on. Like that's so difficult to stomach looking forward. And so it almost takes that exact thing happening with everyone. And so I think this bear, there's been a ton of these like seeds planted. Okay. And it's a bunch of people that had that conversation with a Bitcoiner that was very well read and very educated and very informative and could answer all the questions, but they just couldn't get them to conviction in one conversation, because who can, right? I think it's just another one of these cases where the price is going to have to run up, and we're just going to have to go through this over and over again. And as much as I want to say that, cycles are over now, that institutional buyers are here, like, I don't think that's how this is going to work. I think you have to understand the underlying, and you have to eventually get to your entry point and make those hard decisions to not sell when it's, in a bull or a bear. I don't know.
Everyone, hope you're enjoying the podcast with Cam Duty. Just wanted to chime in and let you all know that along with Onramp Trade, we also have the ability to self-onboard now. So there's a lot of clients we've talked to in the past that maybe necessarily weren't ready, or just didn't know that they could go through online and fill out their documentation and then get a multi-institution custody account, equipped with trade, insurance, lending, IRAs, and all the things that OnRamp provides to the market today. You can do that in takes anywhere between 2 to 4 minutes, just depending on how fast you can upload your driver's license and get onboarded. As a quick reminder, we also have our private client tier for folks that want to get more involved in the community that we're building, private access to investment opportunities via early riders in the guild network. We really appreciate all the feedback, the likes, the subscribes, and the comments. Please feel free to leave some today, as well as reach out to me. Always open. I get emails. Happy to make introductions, put you in touch with our team if you're looking for a role in the space. Michael at onrampbitcoin.com. Hope you enjoy the rest of the show. Yeah, I mean, I think that's directionally right in the sense that if the mental model I've been thinking about and using is we're pre-2000 bubble. Like we're coming up on it. So we're like 1998, whatever. And in this cycle, we'll see that pets.com, we'll see everything kind of blow up and everyone will think it was all scam. They'll blame Bitcoin again. But then to your point, that's when everything came out. Amazon had already existed, and then the company started to form, and it was just understood that the internet was here to stay. And I think that's where we're at, where we get like a longer, more prolonged, blow off top. But then ultimately we're going to realize like, this is where the multi-institution stuff comes in, because I think most people, we talked about it before the pod, like, I just forgot, like, people just are used to the 60-40. They buy their equity in the deal. So it makes complete sense where the ETF is going to be perfect for them, or they're going to buy proxy exposure. Like, they still don't fully wrap their head around that. To Brian's point, it's money and that you need to secure it, because embedded in all of that, like, apprehension we don't discuss, at least for 50% of these individuals, is this is all a Ponzi because everything they see is related to FTX or it gets lost in a landfill. So how can we like blame them because they're like want to stay away from it? Because I always joke, it's like they rather have negative yielding bonds for the rest of their life than just their money go up in smoke the next day. What rational person wouldn't want that?
Yeah. I mean, when I first heard about multi-institution custody, it was a total light bulb moment for me where I realized this is how this is going to happen. It can't happen other ways. The current means of accessing self-custody via hardware devices is just not how the masses are going to do it. That's how we do it, right? Because we own Bitcoin. I owned Bitcoin on exchange until I figured out self-custody, and then I figured out self-custody, and it was not your keys, not your coins. And then I've dealt with having the burden of that for years of like, am I safe against a wrench attack? Am I safe against, this or that? Is my inheritance safe? Does my wife know how to access this stuff if I get hit by a bus? And now that you have so many institutional players involved, like, I totally agree. I remember, Michael, you told me, it's like, we don't want human beings to never trust each other. Like, we don't want to move into a world where like trust is not needed, because like, isn't that the human experience? And but can you create a trust-based system that's redundant enough to be able to accomplish all your security goals? And multi-institution custody is just so clearly that. And
yeah, I think trust minimized, I think, is probably appropriate. But also, you referenced, like, this is something that we were texting around over the weekend. I pulled off on, for anybody listening, the Wall Street Journal had a piece that I think came out yesterday. It was titled "Severed Fingers and Wrench Attacks Rattle the Crypto Elite as Bitcoin Soars, Investors and Executives."
I thought this
are
was
taking
an op-ed written by Michael, by the way, when he texted it.
Our executives taking their swollen digital wallets offline for safety. Criminals are coming after them violently. This is something that, like, personally, why I use multi-institution custody. It's like, I love it. And I also have, we've talked about the barbell approach and, redundant seed phrases and passphrases in your head where you can take off to Abu Dhabi if you need to with some coin. But the point is that, like, you don't want, and they reference it here, is a lot of Bitcoin holders feel good about like defending themselves. But the thing that we don't really think about, I know, Cam, we've talked about this and others, is like our friends and family around us are not like assuming they're at school, kids and all these things. And it's like, there's broken market structure when it's believed that bad actors can just take somebody and kidnap them for all their wealth. That doesn't exist in the traditional world, because there's a bunch of controls from the liquidation of assets all the way to putting it in a black duffel bag, like the person's caught.
Yeah.
And so this is something that we had been a little quieter on because it just sounds like you're self-serving and you're fudding. But the reality is it would make complete sense, because Cam, what you reference is we've already done this. Everyone in the hardcore Bitcoin camp tries to pretend like this thing is so insanely different. It's fucking gold with wings. It's the same principles with different like aspects, but it still is base money that you can take delivery on and sever the counterparty risk by holding it. But that comes with extreme responsibilities and ramifications as the price appreciates, because bad actors exist. And that's why banks existed, not only so you don't get hit over the head, but also to coordinate economic activity. So it was a natural like evolution that when this was going to have to go this way, and everyone just kind of sings the tune of the self-custody forever. And it's just so short-sighted. And I think what people are really missing is that they're going to put a lot of people in harm's way, because a lot of people are going to get hurt as the price is $250,000 and nobody's really talking about it.
No doubt.
Yeah, my mom sent me that article over the weekend too. She's like, "Yeah, you should like watch out for this." I'm like, I understand. Like my like parents and other people who are kind of just watching from the sidelines, who are not, spending thousands and thousands of hours of understanding every single aspect of Bitcoin and how to custody it in the most secure way. They just want to see, their financial portfolio go up in value. And so naturally they'll buy the ETF because it's convenient, it's a name they know. But then if they learn a little bit more, they're just going to understand that this is, naturally a better solution.
Yeah. Nobody wants to die for a trade.
100%.
And like for the new people, the millions and billions of people that have yet to adopt Bitcoin, who likely aren't going to go down the path of, spending 6 months to 6 years understanding how to do self-custody. Like, they are also just going to go into more centralized solutions. And Michael, to your point, it's like the beautiful difference between Bitcoin and gold is the property of multisig. The ability to actually distribute counterparty risk doesn't exist for any other asset. And that is actually going to be the differentiating factor that allows Bitcoin to not follow the same path and fate as gold, which centralized, became manipulated, and ultimately led to its failure as like real day-to-day money. Obviously, its physical nature also contributed to that. Like, custody wasn't the only factor, but Bitcoin has this unique ability to actually distribute the custody. Like, literally doesn't exist for any other asset. And so if I think there's probably going to be this interim period where, as all these banks and financial institutions come in, they're just going to look at it, in your words, like the 2D way, Michael. Like, they're just going to look at it in 2D and not think of like, oh, there's actually a native property of this thing that allows us to do this in a more resilient, fault tolerant way. No, they're just going to do it like they've done it for every other asset and allow it to centralize in their coffers. And that's not a great sort of future trajectory for Bitcoin. If I forget what the numbers are right now in terms of like how much Bitcoin sits at Coinbase, but like that number is only going up with 9 out of the 11 ETF issuers custodying with Coinbase. And so that's not a super healthy trajectory for the asset when we have this alternative to distribute the counterparty risk.
I need to grab a power cord. Be right back.
Okay. I mean, and that's the beauty of what we talked about, like anchoring back to emergent systems, is whoever adopts better products and services ultimately will win this. So whether it's the banks that just, the first version is just let them have Bitcoin or sell Bitcoin, but then ultimately when exchanges are going down and things are happening, well, then they're going to say, well, what's the bank that's treating this like how I want to be treated, i.e. multi-institution, segregated, on-chain, insurance, trade. I know we had a tight rip, but Cam, want to give you, maybe we'll go over for like 5 minutes if you have any thoughts or anything else you wanted to riff on that are top of mind.
Let's do it.
Yeah, go ahead. Free, all yours.
No, I mean, I can cover anything you guys want to talk about. I think like one of the things I want to say, it's like, the stuff that we're talking about is, this may be for like some of your listeners that are new to Bitcoin or trying to wrap your head around it. It's such a simple thing that takes an enormous amount of like unlearning to really understand. And so, these podcasts that Mike and Brian, Liam do every week, I'm sure at some point it feels like almost repetitive, because it's like you have to just kind of talk about the same things over and over again. And it's like Bitcoin is one of these things that once you see it, you can't unsee it. You've heard that you've heard that over and over again. It's just so true. And so your job is maybe the highest value thing that you can do in your life is give this thing enough time to get to the point where you answer that final question that allows you to say, oh my God. And that's just the beginning of this thing. And so anyway, I just want to encourage your listeners that are still trying to wrap their hands around, like, do I make this first purchase? How big is it? You know, my guidance here is like, spend the time to understand what this thing is first, and don't think of this thing as like, hey, I want to appreciate, I want to buy into something that's going to appreciate in price. Just spend the time to do the work, because I promise if you spend enough time in it, you'll come to understand that you've answered all of those questions that you had around, like, why is this thing, not what people say it is. So anyway.
Cam, before we wrap, I appreciate you sharing that. I think proud moment was I think Turner Novick was out in Chattanooga and visited, and he posted on LinkedIn that he was there, and I like commented. I was like, "Did Cam talk to you?" I forgot what it was. It was something about Bitcoin and whether it's the next fund. And he like replied instantly. He was like, "Yeah, I definitely didn't miss a beat." So I'm glad you were able to bring it up because he's pretty popular in the VC community. Curious either how that went, and also, are you seeing any kind of trends or interest from any of the portfolio companies, or anything you want to share in Brickyard around Bitcoin and their interest?
So every one of my friends in venture has heard me talk about Bitcoin, and I'd say it's probably like half the content I put on Twitter is like just thoughts that I have around Bitcoin. And every time the price jumps 5 or 10K, I get 2 or 3 other VCs that I either know really well or that just follow me, that reach out and say, hey, can I spend some time to understand this thing? And the thing that I'm thinking about most right now on the venture side is think about fund construction. And actually, this is kind of wild, but I got on Gemini Deep Research, and I built a presentation on this topic that I'm about to talk about. This probably would have taken me like 2 months of like pretty committed direct work to do, and I did it in like 45 minutes on Gemini Deep Research. And it was just one of those moments on the AI side where it's like, oh my God, okay, like everything is different today, right? And we are less than 2 years away from every single person on earth using this technology to do all of their knowledge work out of necessity. And so that nothing's going to stop that train. And because nothing's going to stop that train, you have venture managers that don't understand, Bitcoin natively, don't understand what the asset is. I think fund construction for the ones that do understand it, if you take 10%, I've talked about this with you guys before, but if you take 10% of your fund, and this isn't for, first of all, what Early Riders is doing is absolutely the right idea. It is how companies will be built in the future. You will be allocating capital against the Bitcoin standard. This is like my feeble attempt to get folks in venture to start to understand the power.
Cam wants to be the Michael Saylor of the VC community. He's vibe speculative attacking, because Saylor was vibe coding for that. He's vibe speculative attacking the VC industry.
Kind of. But like so I built this presentation. You put 10% of your fund in Bitcoin, okay? The biggest problem with venture capital for LPs is that 50% of funds don't return capital. All right. So every time an LP is making a decision on whether to fund a GP or not, it's like, is this the one of 2 firms that is going to not return my capital? Right. And then, and that's just like table stakes. Like, okay, it's not the one. All right. Now, how good are you? Right. it's I'm not going to lose my money, but like, am I actually going to outperform the S&P? Or ideally, like, am I going to 10x this thing or 20x this thing? And so a 10% allocation to Bitcoin on a 10 to 12 year fund, assuming like a 25% CAGR, puts you, it takes you, like, let's say you have a zero bagger on the rest of your investments, you're functionally starting off as a 1.5 to 2x fund. Okay. On a 25% CAGR assumption with Bitcoin, which right now it's higher than that, a lot higher, just double that. Okay. And it's not really hamstringing my ability to actually do my job as a venture investor. Like, I've got 90% of the capital to go and find great companies that are going to be able to drive, power large return potential. And so I think the best venture managers of this next decade, and this is the path to early riders, because they will all eventually end up allocating Bitcoin for Bitcoin's return. Okay. But in this sort of transient period, funds that allocate a small amount of Bitcoin are functionally, they're going to raise more capital from LPs, because LPs are going to start to understand that, Bitcoin's historical CAGR is not going anywhere. They are going to outperform everybody else. Like a mediocre fund, like a median fund, is now going to be a top quartile fund. And a top quartile fund is now going to be a top, 1% fund. Okay. And this is just because you just have this super, this cheat code that you just, put into your fund construction that you don't have to do anything with. And you open up the ability for early liquidity for your LPs. Right. And so anyway, that's kind of my wild card non-consensus bet on the venture side, is that venture capitalists are going to understand Bitcoin because LPs are going to understand Bitcoin before GPs, because they're more fully diversified and they're thinking about all different kinds of buckets of capital. They're going to force GPs to start to understand this thing, and then that's going to make GPs' lives much harder, because now they're going to have to outperform Bitcoin, which is way more difficult.
I love it. We have to jump, but I'm going to tease out. I think I know how you do it, and it has to do with playing with the management fee structure and then downside protecting them, and then you get to participate in the upside.
Yeah.
Because now you take away, we'll talk about it offline, but I was just thinking about it through that. It's like you can play because you know that this goes up to the right. So you can either add to the management fee, take it out of that, buy the BTC, and then ultimately you participate. Yeah. You like that?
I see where you're going with this. Yeah. Let's have a discussion about it.
There's something there, because if you have the conviction, then you can just basically say, I'll downside protect, and this is a traditional fund. I'm going to park maybe a little bit additional management fees. You explain how, for whatever reason, you're taking those additional management fees. You're holding Bitcoin, it goes to zero. Management fees, why would it go to zero? But you don't get hit. But if the price appreciates, then you get the upside, whether it's ownership more in the fund, and then gets to return it, parks in it. It can be even like in an LLC. So it's a business that you purchased into the fund. There's a lot of ways to structure that.
Very interesting.
And then you can actually just spin that out to other VC funds. Say you buy this Pocket, and then you do it in your management fee structure if you have the confidence. And then so it downsides protects the LP, but it upside increases the return profile. Look, we just solved it.
All right, let's.
This is why we needed early riders, because there's too many ideas, and we got to build this multi-institution company. So we had to Cam, this was awesome. Very much appreciate you coming on again. And yeah, Brian mentioned, you're the highest repeat guest. It's just flows. We go from text to Riverside, so it's pretty easy to transition.
Well, thanks for having me, guys, and I love jamming with y'all. So anytime.
Good stuff.
Thanks, Cam.
Thanks, boys. See you in a few weeks. Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.